Hey, it's Clay at claytrader.com. This is my top 10 stocks as we head into Thursday, March 23rd. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, some quick clarifications. Number one, the price you see over here will be changing and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, GME, maybe you've heard of it, has a pretty good track record in the past, but I think the news was the first time it's turned a profitable quarter in quite a while, but the market liked what it saw. And now from a technical point of view, very, very nice pattern. And let me be very clear, as I draw on this line right here, I'm not trying to impress you. I'm not trying to imply this is a great talent or a secret discovery. In fact, the exact opposite. A lot of people are drawing that line. And I say all that because when a lot of people are watching the same areas and wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce very dynamic movement. So while there is no such thing as a guarantee, is it valid? Is it plausible to think that if the price can turn itself around, come up to that trend line and get a break up through it, that break in and of itself could create additional buying pressure? That's certainly a more than plausible outcome. So keep an eye on that level, especially if you like to play breakouts. For those of you that like to play more so pullbacks, then a very clear level where the bears tried a couple different occasions to push down through right at that 2305 mark. But if you want to just keep it easy at 23, that would be a key level to watch right there. So in all actuality, you have this little triangle here to keep an eye on, where again, in my opinion, the most interesting dynamic is, can the price turn itself around? But I can also see other viewpoints of people coming down there thinking that it could bounce from there and then trying to play a move to the upside. So several ways you could potentially play it. But yeah, overall, big movement, nice pattern, good, solid, self-fulfilling prophecy type areas. So let's see what happens with it on Thursday. Next one here, BOXD, and a penny stock that made a very nice move, good solid pattern. So once again, some of those talking points of self-fulfilling prophecies. And in my mind, the key level to watch very closely moving forward, right there at $19. Quick track record here, you can see rejected the price, rejected the price, rejected the price, fake break above it, back down, and then once again, rejected the price. So you got to think that a lot of people are watching that 19-cent mark. So again, are there guarantees? Absolutely not. But is it plausible to think that the price comes up to 19 and gets the break up through there, that break could create additional buying pressure? Yeah, that's certainly a plausible outcome. So keep an eye on that 19-cent mark. If you more so like to play pullbacks, then an interesting level as far as support is concerned down there at the 14-cent mark. So keep an eye on that. But all in all, in my opinion, at least the most interesting dynamic, and probably the dynamic that most people are going to be watching, is all about that 19-cent mark. So if you like penny stocks, if you like to play potential breakouts, certainly keep an eye on it. Next, MULN, and in order for all this to make the most sense, let me first draw in a couple levels here. So let's use array for this one. So there we go, and let me change that to green to represent more so a support area. So green, and make it a little bit easier to see. There we go. And then on the flip side of this, we have this area up here. And this would be what I would call a falling wedge pattern, which is actually a bullish pattern. Now, a rising wedge is a bearish one, so kind of counterintuitive, but that's just whoever named them, that's how they named them. But what's interesting about this pattern is the fact that, as you see here, the price is right at the lower part of that pattern, which brings about a very valid question. And the question becomes, all right, is the price going to get a bounce off this level? And if so, how far will it go? And could it potentially even get a break up through that level up there? Now, to be fair, there are no guarantees, so maybe it doesn't. Maybe this thing completely collapses. That's why risk management matters. But the point is, from a risk-reward scenario, relative to what's being risked, if you do get some sort of movement back in the upside direction, you could be looking at a very profitable, risk-reward ratio in that situation. So once again, if you like to play patterns, if you like to play these sort of scenarios where you're looking at very minimal risk, assuming again you're going to be disciplined and honor stop losses, where if you do get that bounce. So if you like these sort of scenarios, you like penny stocks, then definitely keep an eye on it. But yeah, MULN, the best way to summarize this one right now is falling wedge pattern. Next one here is AMD, and I put this one very strategically in the watch list. So let me get that line in place. And then get that line in place. And what we have here now is a rising wedge pattern, which again is actually bearish. Now, just because something's bullish does not mean the price is going to go up. Just because something's bearish does not mean that the price is going to go down. But at this point in time, I am certainly more bearish on AMD, That doesn't mean that you can't make money on it from the long side, but it's had a big move up. And, with this rising wedge pattern, it suggests, and to be fair, I mean, the last 30 minutes, maybe this pattern has already started to kick in right here with this big red bar, during the, forming as I speak with the last 30 minutes here. But now it's really just a question of, okay, is the rising wedge pattern really going to kick into effect? Meaning, can the price first off get down and test that level? And then the golden goose question is, all right, if it gets down there, can it break? And if it breaks through there, that's where the floodgates could really start to open up, and you could start to see a bigger pullback that, who knows, could potentially even turn into a reversal. But I'm not saying that's what's going to happen. I'm not calling for a full-blown reversal, but what I am suggesting, and what has already started to take place, is that a pullback is going to be in play, and it's just really a question of how deep does the pullback get, and who knows, maybe the pullback turns into some sort of reversal. But like I said, rising wedge, is already in effect with the last 30 minutes. So question number one, can it get down to that trend line? And then question number two, does it break the trend line and get that much more continuation? So let's see what happens with it. Next one, AMC, and a very, very brutal last 30 minutes here. I mean, basically wiping away, not basically, it is wiping away all of today's gains. And the problem is now pushing down below that line right there, which you wanted to see act as support. And wow, look at this, continuing to drop. As I speak, market still got 6 minutes. So that's why I like to do these while the market's open, like I mentioned earlier. So yes, very, very brutal last 30 minutes here, as the price is now potentially falling back inside of this range where it was. And the previous range, was right here, that red line, and then this green line here. So the price was in this sideways channel. And like I said, as I speak right now, you can see that the price is starting to poke its head back down inside of that channel that it just broke out from. Not exactly a sign of genuine power, which brings about a very important question. How far down into this channel is the price going to move? And the further the price goes into the, the channel, then the more and more evidence you have to say that this movement right here has officially just become a dead cat bounce. I'm not quite willing to call this a dead cat bounce, but again, it goes back to that dynamic right here. How deep down is this going to go? And if it gets down, to the $4.20 mark and potentially below, at that point, this movement here is essentially all wiped away. So yeah, brutal last 30 minutes. Really, up until the last 30 minutes, the chart was doing just fine. Gapped up, was holding those gains, but yeah, the last 30 minutes has completely changed, the outlook on things, and kind of caught me off guard because last time I looked at AMC, I was planning on talking about it in a very different way, but I pulled it up and here we are looking at the last 30 minutes. So yeah, a brutal final candle. Real quick, want to take a break and personally invite you to get signed up for this free live online webinar that I'm offering here very soon. So if you've been enjoying what you've seen, you want to learn more about this tool, how it can and should be used to build consistency, to manage risk, then definitely get signed up for the free class. Like I said, it'll be very soon. In fact, tomorrow, Thursday, March 23rd at 7 p.m. Eastern time. So I hope to see you there. So if you are interested, then there's a link down in the YouTube description box, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if this sounds of interest, then certainly get signed up for the class. Next one here, VORB, and like AMC and a lot of these stocks, very brutal final part of the day, which is now essentially kind of destroyed what I was going to be talking about. Because in my mind, we had this not in my mind like it didn't exist. It definitely existed. So I was getting ready to talk about a nice bull pennant pattern, but with the break here down below this level, and now the continuation where it's now doing battle with that purple line there, the 50-period moving average, it really changes the landscape and just throws up the question, how bad is this breakdown going to get? I mean, was looking so good, but is absolutely failing right now. A level to keep a close eye on, though, will be down here at the 50-cent mark. And 50 cents is very, very important for the same reasoning of AMC. Not saying this will occur, but if the price comes down here and breaks down through it, what do you have? All of a sudden, you have the price having gone right back to where it was. In other words, you're basically looking at a dead cat bounce where the price, to be fair, did make a nice move, but then has gone right back to where it was. Again, I'm not saying that's what's going to happen, but that's why 50 cents, very important here over the next couple of days. Next one, TSLA Tesla, and overall, not a whole lot of shocks, maybe a little bit of a cruel move here, and this will mean a bit more to those that have watched past videos, but I've been talking about that $200 mark as a level of resistance, and you can see right here, opening period came up, fake breakdown, once again came up, or excuse me, not a fake breakdown, a fake breakout, and then once again, fake breakout. So two fake breakouts, but I guess I should reword. Yeah, the fake breakouts are annoying, but was it like randomly happening? No, it happened at a very well-defined level that, was talked about previously. And then you can see right there that movement, got essentially rejected right at that $200 mark. So moral of the story here, $200 remains a very important level moving forward. In terms of areas of support, this one has now been, blasted down below. Again, last 30 minutes here, absolutely brutal. So let's map out some other areas. So two main levels of support moving forward. First level, right here, that purple line, which I've talked about before, 50-period moving average, that's valid at, let's just call it $189. And the next level is that green line down there, the former breakout area right there around the 186.50 mark. But yes, big pullback here. Does this pullback continue into Thursday, drag the price down even further? We'll have to see what happens. Next one, FRC, and at this point, looking like all we had was a dead cat bounce. Same logic that I've been talking about right here from where it was at these lows. Started to head upward, so at that point became very valid to say, hey, do we have a double bottom bounce, double bottom potential reversal underway? Made total sense. But then it made sense to say, okay, well, we got to make sure that this thing is making progress, and I define the progress area as that green line. But now you can see right here, last 30 minutes, the price is peeking its head down below there. So it just becomes that same general question that we've covered. And I realize that I'm kind of saying the same things over and over, but that's just how the market goes sometimes. Sometimes you're going to have a lot of different stocks looking the exact same way, dictated by just the overall nature of the market. So we have that once again. Is FRC about to go right back to where it was? And as I've mentioned, and as you now know, price movements that make a good move and then go back to where they were, that's not a sign of any sort of genuine power. So that's the current status right now is, does this thing, drop further, go right back to where it was? And if so, then yeah, this little potential double bottom bounce here was just simply a dead cat bounce. Next one, CVNA, and all things considered, held up pretty well. We've been looking at a lot of charts that were just breaking and just blasting down through levels. And sure, this one did pull back. But like I said, all things considered, this one doesn't look so bad. But we got to keep in mind that the bar is kind of low right now. But yeah, it doesn't look so bad. But this does bring about, I don't remember, did I say the ticker symbol CVNA? I can't remember if I said it or not. But we have our resistance breakout point right here for the bottom part of the pattern and support. Let's just use that pink line there, 200-period moving average. So, we'll just use that as our key level. So to keep it one color, we have our resistance, we have our support, you have the big move up right here. For you golfers, we'll make it more visual. Let's put the golf foot on there. In this situation, we have a bull pennant pattern. So as I've mentioned earlier, while there are no guarantees, is it valid? Is it plausible to think that if the price comes up here and gets a push up through that level, that break in and of itself could create additional buying pressure? That is certainly a plausible outcome that could apply. So if you like stocks down below $10, you like bull pennants, certainly keep an eye on it. And then we're looking now at TQQQ. This is an ETF that measures the NASDAQ market. So if you believe that the NASDAQ market as a whole is going to rise, this one will also rise. Difference here, this allows you access at a much lower price point. So given it measures the NASDAQ market, then this should start to make sense on why a lot of these other stocks were looking just brutal. Look at the last 30 minutes. Now, yes, today was the Fed meeting, not the Fed meeting, but the Fed announcement and all that stuff. But brutal last 30 minutes. But what makes it so brutal is that now the price is starting to enter back into this former range all the way down here that it had broken out of. Again, you look right there and it's poking its head down in that area, which brings about the question, which you've heard me say it before, but it certainly applies is, how bad is this going to get? Is this thing going to continue to drop down inside of this range? And is it going to go down to that 200-period moving average? At this point, seems plausible, seems possible. At 23, we'll call it $23.30 as that key level. But that's going to be the big question mark here. Is brutal, just pure bloodshed last 30 minutes. And from a technical point of view, has broken through the 50-period moving average, has broken through that area of support. So how bad is it going to get? And, if it does get really bad, then, I think that, the 200-period moving average is almost a given. But it is the NASDAQ, and the NASDAQ sometimes have a mind of its own, so maybe this thing snaps back around. I would not suspect that. But yeah, last 30 minutes has really changed the landscape on things, because think about it. Before the last 30 minutes, that's what the chart was looking like. Sure, it was crazy with the Fed announcement, but overall, put higher highs, higher lows, all that was still completely in play, and then the last 30 minutes showed up and has completely rearranged everything, so we'll see what happens on Thursday. But I guess best case is just grab your popcorn. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to get signed up for the free class. Like I said, it'll be very soon, Thursday, March 23rd at 7 p.m. Eastern time. So I hope to see you there. If you enjoy these live trade or these top 10 lists, I do offer live trade videos too. So check out the channel for those. But these are top 10 videos. If you enjoy these top 10 videos, then do two things for me. Hit that like button, leave a simple comment down below. And those things really help out the channel, help out the algorithm, and I thank you in advance. So again, get signed up for that free training. Hit that like button, leave a comment below. Thanks for watching.